This video will show you how to calculate the return on an investment or ROI for 2 bedrooms short and long-term rental. We will show you an example with different scenarios for you to practice. Please do not forget to subscribe, helping the channel to produce more videos like this. You can download the table with exercises for free in the description below. Channel disclaimer. The information provided by DCH Realty Florida, LLC DBA DCH Real Estate DBA DCH Property Management in this video is for reference and informational purposes only, and is not intended to provide professional advice. Moreover, you acknowledge and understand that the information we provide in this video is not a substitute for obtaining professional advice from a qualified person, firm, or company. Therefore, you should not rely upon the information provided in this video in making any decision, including but not limited to, any decision concerning a particular investment or to buy any products or services from us, or any other company. The information displayed on this video, including any prospectus information, is not an offer to sell or a solicitation of an offer to buy any type security, service, real estate or product, and is not intended as legal or tax advice. Please consult your legal or tax professional for proper advice. You agree that accessing this video does not create a professional or business relationship with you. Video disclaimer. This video is meant to educate on how to calculate and compare a return on an investment between short-term rentals, daily rental properties, and long-term, regular 12 months rentals. This video will also show financial situations involving mortgages in the different scenarios. This video is an educational video only. This video cannot be used and must not be used to make decisions on any possible purchase the user might be looking for. All values described on this video are based on today's current market in year 2022 to 2023, subject to change at any time. The user must know that values change depending on location, type of property and demand. The values used on these examples cannot and must not be interpreted to any possible investment. This video will explain how to calculate the return on an investment, ROI, with 2 bedrooms furnished property with and without a lockout. Short-term rental 2 bedrooms paying cash and with a loan. Short-term rental 2 bedrooms with lockout paying cash and with a loan. And long-term rental 2 bedrooms paying cash and a loan. Let's go over the video. Understanding the formula. Net operating income equals real estate revenue minus operating expenses. Although we can still break down the operating expenses into fixed and variables expenses, we are going to leave that explanation for another video. We are going to enumerate the most common expenses you need to look into in general. They might vary depending on the type of property you are reviewing. Please consult an expert. Investors use this formula to analyze investment properties, where there are a few things to consider, since NOI or net operating income is determined at a property level, and not at the investor level where other factors are taken in consideration. NOI does not include numbers that can be written off against future earnings and taxes. Confused already? Let's go over a sample evaluating a 2 bedrooms condo in Miami with different scenarios. Short-term rental furnished 2 bedrooms paying cash. We are going to assume we are analyzing a 2 bedrooms condo for $800,000 with 1,000 square feet. The Homeowners Association is $1 per square foot. Next, we have the average daily rate and occupational rate, variable values based on location. Very important, when you analyze an area, try to use the yearly average rate rather picking a value from any date of the year from the area you are doing the search for. Daily rates change through the year depending on high or low seasons. We are going to use random average daily rate of $475 and an occupational rate of 85% in a year. We will play with these values shortly. That will give us a gross income of $12,281 a month and $147,369 a year. A property manager is always a must on every real estate investment, especially when we talk about short-term rentals. We will have another video talking about what we do as property managers. Property managers in short-term rentals will not only look out for the property but will also market it for a fee. For this scenario we will use 30% as a management fee. Property tax changes depending on location. A local real estate agent can always help getting this value for you. We will use 2% of the purchase value for this example. Now we go over expenses. On the left, we have already calculated monthly expenses, and the right, yearly expenses as property taxes, management fee, insurance, maintenance that can include air conditioning and others, utilities. Rental commissions will not apply this time, since a management fee is covering any possible commissions. Legal fees, in this case talking about a tax declaration. And finally, the HOA fee, or Homeowners Association, calculating it, multiplying the HOA fee times the living area square footage of the property in subject. We add all these expenses, getting $6,401 a month and $76,811 a year. We deduct that out of the gross income to get a net monthly income of $5,880 and a net yearly income of $76,558. We then divide that by the property price to get the actual return on the investment of 9%. Now let's play with different areas and change the average daily rate to $375. We then see how the ROI goes down to 6%. Now, let's be a little more conservative, looking at 72% occupational rate, bringing our ROI to 5%. Next, we will view the same scenario with a loan. Short-term rental furnished 2 bedrooms with a loan. Now, let's review the same example with a loan, where we have the exact values we had on the previous exercise, but now applying a loan. We are going to assume we have 50% deposits to keep it simple through all the exercises. We are going to review the same scenario with 6% interest rate and 9% interest rate. Then we will also change the occupational rate at 72% and the average daily rental from $475 to $375. Now, let's review it with a 6% interest rate. We have a principal and interest rate amount of $2,398. Although principal and interest payment is not used to calculate the net operating income, we are going to place it as an expense to be able to calculate the ROI, or return on the investment, on the cash invested only. Remember, we now invested on this example 50% of the total purchase price, a total of $400,000, giving us again a ROI, or return on the investment on the cash invested, of 10%. Let's review the results with 9% interest rate now, where the ROI goes down to 8%. What if we also change the occupancy rate to 72%? Then the ROI goes from 8% to 4%. There are some cases where the management fee can also be negotiated with your operator or property manager. Let's see what happens if we change it to 20%. We then see an increase in our ROI from 4 to 7%. Now, let's go back to the initial scenario to view the same scenarios, changing the average daily rate. Again, remember this value is calculated depending on location and demand. We will have future videos talking about daily rates only. Let's now change it from $475 to $375. An important deduction to review the investment behavior. We keep 6% interest rate and an occupation rate of 85%. We see how the ROI goes to 8%. Let's now change the occupational rate to 72%. The ROI, or return on the investment on the cash invested, will then go down to 4% from 8%. Perhaps it is time for another negotiation with my management fees with channel commissions. Let's do 17% this time, raising my ROI, rounding up back to 5%. Now let's push this sample even further with the average daily rate at $375, occupational rate at 85%, and now the interest rate at 9%. We then view a return on the investment of 6%. Let's change again the occupational rate to 72%. The ROI will then go down to 3% from 6%. There are some owners that might even consider manage the property themselves. What if we change the management fee to 5%? The ROI will then go up to 6%. Having fun already? Now, we are going to review 2-bedroom short-term rental with lockout option. Short-term rental furnished 2 bedrooms with lockout paying cash. Now we are going to review the same scenarios than before, a 2-bedroom short-term rental, but this time with a lockout option. Meaning it can be divided in 2. Where you will have an option of a 2-bedrooms condo, or 1-bedroom with 1 studio. Let's review this scenario. We then add another income since now we have divided the property into 1 studio and 1-bedroom. To keep this video short, we are not going to play many scenarios this time. We will try to keep it simple. We will assume that the 1-bedroom average daily rate is $300 and the studio is $250. Although, we will change the occupancy rate. With 85% occupancy rate in the same scenario than before. That will give us a gross income of $14,220 a month and $170,638 a year. A property manager, as we said before, is a must on every real estate investment, especially when we talk about short-term rentals. For this scenario we will use 30% as a management fee. We said that property tax changes depending on location. A local real estate agent can always help getting this value for you. We will keep 2% of the purchase value for this example. Now again we have expenses. On the left, we have already calculated monthly expenses, and the right, yearly expenses. We add all these expenses getting $6,983 a month and $83,791 a year. We deduct that out of the gross income to get a net monthly income of $7,237 and a net yearly income of $86,846. We then divide that by the property price to get the actual return on the investment of 11%. Now, let's be a little more conservative looking at 72% occupational rate for both properties. You can always do exercises changing them individually, bringing our ROI to 9%. Next, we will view the same scenario with a loan. Short-term rental furnished 2 bedrooms with lockout with a mortgage. We are going to use the previous example, a 2 bedrooms with lockout, but this time we will apply a mortgage loan. Again, we are going to assume we have 50% deposits to keep it simple. We are going to review the same scenario with 6% interest rate and 9% interest rate. Then we will also change the occupational rate at 72% and the average daily rental for a 1-bedroom from $300 to $250, and the studio average daily rental from $250 to $200. Now, let's review it with a 6% interest rate. We have a principal and interest rate amount of $2,398. Although, principal and interest payment is not used to calculate the net operating income, we are going to place it as an expense, to be able to calculate the ROI or return on the investment on the cash invested only. Remember, we now invested on this example, 50% of the total purchase price. A total of $400,000. Giving us again, a ROI or return on the investment on the cash invested of 15%. Let's review the results with 9% interest rate now, where the ROI goes down to 12%. Again, let's be a little more conservative looking at 72% occupational rate for both properties. You can always do exercises changing them individually. Then the ROI goes from 12% to 7%. Now, let's go back to the initial scenario to view the same scenarios changing the average daily rate. Again, remember this value is calculated depending on location and demand. We will have future videos talking about daily rates only. Let's now change the 1-bedroom from $300 to $250 and the studio from $250 to $200. And review the sample behavior. We keep 6% interest rate and an occupation rate of 85%. We see how the ROI goes to 9%. Let's now change the occupational rate to 72%. The ROI or return on the investment on the cash invested will then go down to 5% from 9%. Perhaps it is time for a negotiation with my management fees with channel commissions. Let's do 20% this time. Raising my ROI rounding up back to 8%. Now let's try interest rate at 9% and occupational rate at 85% in both sections, the 1-bedroom and studio. We then view a return on the investment of 10%. Let's change again the occupational rate to 72% for both sections. Again, you can always do it individually. The ROI will then go down to 6% from 10%. Now, we are going to review 2 bedrooms long-term rental next. Long-term rental furnished 2 bedrooms paying cash. Now, in long-term rentals we do not need to worry about daily rentals or occupational rates. We are going to assume the monthly rent is $5,500, being $66,000 in a year. A management fee is now 10% since we are talking about long-term rentals. Again, we will have another video about everything you need to know about property managers. The ROI is then 3%. If we change the monthly income to $6,000, the ROI will go up to 4%. Now, would you like to know what happened if we applied a loan? Long-term rental furnished 2 bedrooms with a loan. We are going to use the previous example with a 2 bedrooms furnished condo rented for a year or 12 months. One more time, we are assuming we have 50% deposits. Applying the same scenario than before with a loan. We will use 6% interest rate and later 9%. The principal and interest will then play a very important role on my cash flow. Let's use $5,500 as our monthly rent, giving us $66,000 in a year, giving us a ROI of 1%. Remember that now our investment was 50% of the purchase price. Let's try now $6,000 as our monthly rent. Our ROI goes up to 2%. Now what happens if we change the interest rate to 9%? We see how our ROI ends up negative. There are a few things to consider. Like the commissions can be negotiable to be paid once only and no with renewals. That could probably help if you find yourself in this scenario. We're assuming you go to the next year. The exercise will then have a positive ROI of 1%. I hope you have enjoyed and learned how to calculate the ROI in a furnished 2 bedrooms. What is your favorite scenario and what can you do to make it better? Please leave your comment down below. Thanks again for watching. Please do not forget to subscribe to our channel and stay tuned for our other tutorial videos on how to calculate the returns on an investment for a multifamily and the difference between a residential and commercial multifamily. Do not forget to share, comment and like our videos.